tax on sales and purchases. It's very simple, but before I tell you basic settings, let's go to postings first. What is postings? Postings is where you define a code and attach GL account. Define tax accounts. Tax accounts will be, no, there are keys. VST for sales tax. Now this is VST, and there will be a credit and debit entries for input tax. Input tax is basically treated as an expense. Okay, so it will be a debit every time, but if you reverse it, it will be 50. VST selected rules. And the rules are simple. FI 46 is chart of accounts. Tax code plus country will be mentioned for this chart of accounts. I select this accounts, and we have a GL account already attached to it for a tax code that is F7. F means filer, and 7 can be 7%. Okay, so that is posting. It's already done. Assign country and tax code to GL accounts. F546. Enter. Select. GL account, country, tax code, new entries 80300. FI46 input sales tax. Country is GK, tax code is F7. Save. FI46. Save. Okay. Define account for exchange rate difference posting. Tax code for non-taxable transactions. Okay. FI46. Input tax, output tax. Non-taxable is, we have not defined any non-taxable, so we will define that. Okay. Let's say is V0 is 0. Tax code not defined. Tax code not defined. But we will define it. Where will we define it? I'll tell you that. But let's first explore this. Define account for exchange rate difference posting. Chart of accounts FI46. Debit credit, yes. Save. Okay. Tax exchange rate differences. This is important. Why? Because if you are buying from the vendor in USD, but paying in PKR, there will be a difference in the exchange rate. That exchange rate will be captured here and it will be mentioned. So let's put 80300, 80300. Save. Save. Transfer tax for cross-company code transactions. Let's explore this. This is something new, even for me, but let's explore it. Company code 2, tax code, tax relief code, tax code 2. No, I cannot explore it right now. We have to study the documentation, but we'll do it later. Transfer tax for cross company. In case of cross company code, the whole tax amount is posted to and displayed in the first company code only. Okay, rule number 1. The tax arising of the company is ignored. However, in countries like Japan and Denmark, the tax amounts have to be displayed separately. In this activity, the program creates a list of tax amounts for which automatic transfer must be later made. When you start the program, choose the first company for which the tax is to post. The number of documents to be included will depend on the fiscal year, the business periods. The tax amounts are calculated according to tax code or pro rata. Pro rata means then and there what is the rule. Create a list of tax amounts for which transfer postings must be made. Create a list of tax amounts. Tax amounts, if it is tax amounts, that means it is fixed amount. Read the documentation for program RF bus 10. Okay. Um, S program RF bus cross company code transfer posting. Double click. Process before output initial Cooper's keyboard with that. Okay, these are tables and fields. Plus 8. Okay, so we'll have to sit down and study it. They have given everything. This is something good. So we'll take it on later. Okay. Um, let's go back to our. So you have learned something new that if you want to see how the program is run, you just take the program name if it is there. If you don't find the program name, okay, you go to technical information, edit documentation, technical information. It is not highlighted, but it will take you there. And from there, you go to SE38 and see the documentation. Okay. Now comes the calculation part. Define tax code for sales and purchases. Country UK. Tax code V0. FTXP is the T code. V0 is zero sales tax code. Non-tax transactions. Okay. Tax type input. Continue. Input tax 0.00. Save. This is saved. Enter tax accounts FI46 A0300 and save. This is saved. Okay. Now V0 is validated. Calculation. Define reasons. We'll see this later, but let's go to basic settings. Basic settings calculation procedure is the first part. Access sequence, condition types, and procedures. Access sequence actually is telling what to include first. It is the tax code and the country. Access sequence. Enter. US taxes, and page up, MWST. MWST accesses, and here it is the country, tax code, and country. I'll select this one. What are the fields that are being included? Country and tax code. That is access sequence. This is the sequence it will follow. Country and tax code. MWST is the access sequence. Condition types. Condition types is MWBS. MWBS is part of the access sequence. Double click. MWST, access sequence and condition. Condition is input. So input, now these are the features. What is the feature? It will be a tax based on percentages. And it will be amount or percent. Okay. It will have a value. Or you can use the code for accruals also. So these are some of the checks. Okay. Changes which can be made to the amount of percentage. Yes, we can change the percentage and the amount when we are calculating the tax manually. Save. MWBS is input. MWAS is output. This is output text percentage. MWST is access sequence, which is country and tax code. Okay. Amount and percent cannot be changed. And that's it. Okay. There are other taxation heads, like non-deductible input tax, which cannot be deducted from the material. It will be included in the material part. Okay. This is how you will include these. Output tax for Australia. And this is OZ01. What are the MWST is the access sequence, which is country and tax code. Other than that, no other checks, as simple as that. Procedures. Okay, procedure is for which is country based control data. Control data will tell you that MWBS will take the calculation from base amount, which is line 100. Based on line 100, it will calculate BST, which is input tax. Okay, as simple as that. And we are done with taxes. As simple as that. Okay. Next is withholding tax. We'll cover that in the next lecture.